Hello and welcome to IBTimes TV. I'm Leanna Brinder, business editor for the International Business Times. Joining me now is Abhishek Sachdev. He's the managing director at Vedanta Hedging. So hi Abhishek, thanks for joining us today.
Hi Leanna.
Hi. So on the mis-selling derivatives scandal, the latest development is Britain's biggest four banks have somewhat changed the way they pay redress. Can you just maybe give us a picture on the differences between each one?
Yeah, the good news is in the last 48 hours we've seen the banks basically say that they are not going to try and lump all the payments together. And when we say payments, we mean the banks before were saying they're going to basically combine the consequential loss payments as well as the redress payments. What that means is a further delay for businesses to get their redress. But what we've seen in the last 48 hours is the banks basically say that they will make the payments split into two, which is welcome news.
Right, some of the banks have done a blanket system effectively. That means all customers sold these products will be able to have their redress paid before their consequential losses have been calculated. However, a couple of the banks, one of them in particular, hasn't changed what really has happened before. Why do you think that is?
Although the FCA scheme is meant to provide uniform consistency across all of the banks, we still do see differences across the banks. Some of the banks are saying they're going to give blanket one single, split payments, where some of the banks say they're going to do it on a case-by-case basis. As ever, the banks are justifying it for different reasons. Some banks are saying that they will do it for customers in financial distress, and some are saying that they'll do it as a matter of policy. But it's just one of the issues of the scheme, unfortunately.
A critic would say that every single company that have been sold these kind of products, whether mis-sold or sold, they are in financial distress anyway because they're paying thousands of pounds each month just on the swap alone.
Absolutely, and let's not forget that some of these businesses got sold these products sometimes as long as 11 or 12 years ago, because remember the scheme goes right back until 2001. So they've been waiting potentially for that long to get their money, and some of the banks are still waiting to delay it for a further 6 months, a year, etc., etc.
Well, you're at the coalface of meeting all these companies and seeing how their settlement process, if there is one, is going ahead. How have you seen in terms of the speed of the process happening? Do you see lots of settlements happening all of a sudden, or do you see maybe still being dragged on for many months or years?
Well, in terms of the out-of-court settlements, they're still sort of happening, and of course they're the ones which businesses have engaged the legal process in, but unfortunately they're pretty much always bound by confidentiality. In terms of the FCA review, even Martin Wheatley said last week that he's disappointed by the slow progress of the banks. In fact, I think he said it last night on the Mansion House speech as well. So, the progress is improving, and month by month we will see a rapid increase, but then again, that's from a very low base.
Well, naturally, there are a lot of companies out there that, it's not just affected their work, but it's actually affected their personal lives, and are understandably very angry at the speed of the review process, and of course, dragging it through the courts. They don't want that. What would you say in terms of how the banks are still profiting out of this scandal? Because we've obviously, maybe explain a bit about the swaps, how they're still making a profit even if they've granted redress.
Yeah, so just on your earlier point about the speed, the challenge, of course, for the FCA is that each of these products has to be looked at individually. So there's only a limited amount the FCA can do, because it's the banks and the independent reviewers who still have to go through each and every single sort of customer, individually. With regards to the banks profiting, unfortunately, we've seen in some of the redress offers in the last few weeks that the alternative products the banks are providing themselves carry what we would call an excess amount of profit in these replacement products. So potentially the bank is, for the second time around, profiting potentially at the expense of the small business.
And now let's talk about consequential losses. This has been quite a touchy subject for the banks. They don't really want to talk about it, and they haven't really. In terms of the amount they've set aside, how big of a part of this scandal are consequential losses?
I think if consequential losses are treated properly and professionally with consequential loss accountants and forensic accountants, in some cases the consequential losses will be larger than the actual redress payments due, because some businesses have legitimately been forced to sell properties, not been able to develop care homes, hotels, etc., etc., and they have very quantifiable and tangible consequential losses.
Let's also talk about another part of the scandal, about the liabilities. and the cost of those. Maybe you can explain to the, the audience a little bit more about that, because it is quite complicated.
Yeah, in terms of the hidden liabilities, often with these products, the banks would be required to set aside contingent liabilities to underwrite the security of the swap. But this was rarely disclosed to the small business, which means that it would curtail their ability to borrow in the future and affect for instance, their loan-to-value ratio without them knowing it. And they only realised it when the bank basically said, oh, by the way, you've breached your LTV covenant.
Well, you've been speaking to a lot of politicians over the last couple of years. Has this part of it with the hidden liabilities really come up, and is it being tackled in a way that can be, I suppose, a clause be put into the review, let's say?
The contingent liabilities, I mean, the FCA is aware of it, and a number of politicians are aware of it. I mean, it is quite a complicated topic. It hasn't been brought out yet, but, we hope that it will do, potentially even in the debate today.
Okay, and so I suppose one of the big things that a lot of people have been asking is about probably one of the most famous cases in Britain in terms of the Guardian Care Homes case. I know you may not particularly be able to speak about the people in it, but in terms of how it's viewed as a landmark kind of case that may decide how banks litigate, do you see that as like a benchmark case?
It's certainly an important case, but I don't know how much people should get really excited about it, because we've got Unitech and Guardian both, who the courts are basically going to say, can you link together the LIBOR manipulation claim with the derivative mis-selling claim? And even if the Court of Appeal says that that can be done, there's a long way away before we actually get to trial and these things actually get settled. What is pretty clear is that if all LIBOR-related derivatives were unwound, that would be financial Armageddon, because we're talking potentially $300 trillion worth of derivatives.
Okay, and I suppose rounding off, because we are outside Parliament today, there's a backbench debate. What are you hoping that's going to be discussed, and what would be the preferential outcome to it?
Yeah, and I think it's very welcome today that we're having another parliamentary debate on this, and we work with lots of MPs to help advise on this. We're hoping that MPs will discuss today putting in place an appeals process for the FCA review process, because at the moment there is none, and we believe that one can be put in place quite simply and quite cost effectively. And also the inclusion of these hidden swap business loans, which are basically fixed rate loans with embedded derivatives within them. Some have been included within the review, but as Martin Wheatley admitted a few weeks ago, there is a gap in the regulatory system for these. So we hope that the regulator can actually formally include all of these products within the review process.
Well, thank you very much for joining us today. I know how busy you are. So that was Abhishek Sachdev. He's the Managing Director of Vedanta Hedging.